Hi everyone and welcome to CT Connect. Today we have an extended version delving into personal insurances. I'm joined by Len from PPS Mutual and Joey from Share NZ, who is our local PPS accredited advisor. Firstly, Len, welcome along today and congratulations on the recent entry to the insurance market. That must have been a bit of a process.
Yeah, thanks. It's been great. We started just under 2 years ago, so to bring the PPS proposition to life here in New Zealand, get all of our licenses approved, develop all the technology, hire our people, and accredit all of our advisors. I think it's been a great effort, and we're very, very proud and also humbled to be serving New Zealand professionals.
Fantastic. Now, we've been talking a little bit about the concept of mutual, what mutual means, but also a little bit of history around where PPS has come from. Can you just share that with us?
Yeah, sure. So PPS, or the Professional Provident Society, started in the 1940s in South Africa, and initially was founded by 8 dentists who saw an opportunity for them to come together in order to provide sickness protection benefits. And over time, eligibility has grown, and PPS as a business has grown, and it's now a large South African insurer servicing exclusively the graduate professional market across life insurance, health insurance, general insurance investments. The business has also since expanded into Namibia next door, and also to Australia back in 2016. And then we've opened up our doors here in August of this year. And our focus is very much on protecting the graduate professionals.
Okay. And the mutual concept, how does that work?
Yeah, so as a mutual insurer, our customers are our shareholders. And so we focus not only on providing really comprehensive coverage to that segment of the market, but also allocating the capital and the profits that the business generates back to our members through our profit share benefit. And what this means is that we are focused exclusively on serving our members, whether that's through paying claims or whether that's through allocating profit share benefits. But ultimately, all of the premiums that the customers pay after deducting expenses, the cost of running the business, are allocated back to all of our members. So we don't, for example, become focused on short-term dividends or returns for our investors. Our investors are our members.
And you talk about a lot on your website around the professional services. Could you just, between the two of you, give me a bit of an example about the types of people this would insure and what you're looking for as the ultimate customer, I guess?
Yeah, sure. So PPS focuses on the graduate professional market, which is a market that we understand. That's not to say that anybody that, for example, doesn't meet our eligibility criteria is not a professional. We just focus on the segment of the market that we've really developed experience in over the past 80 years. So for us, there's a couple of ways that the members can qualify for membership. So the first one is being a member of a professional association. So we've got about 20 odd professional associations that are within our eligibility criteria that members could be a part of. Or alternatively, if a member has a 4-year or higher graduate degree and they're working in a professional capacity, then they're also eligible for membership. And so that's the market that we're really focusing on.
I think another important thing to touch on is that members can also gain coverage through an associate membership through their partner or business partner. So maybe if you don't meet that criteria, there is still potential for you to gain coverage through an associate membership. So that's also something to add.
Okay. And tell me a little bit more about the specifics of the offerings, the type of policies that are there, and how might they differ for the professional services that you're offering the insurances for versus a mainline insurer?
Sure. So I think there's a couple of ways we do that. Firstly, because the graduate professional market tends to have more favourable claims experience and tends to retain their cover for longer, that then creates value that we're able to allocate to our members through more comprehensive coverage. So our terms and conditions are broader, the types of insurable events that we cover tend to be a little bit broader. But in addition to that, we also have the profit share benefit, which is a mechanism to distribute the profits that the business generates back to our members. In terms of the design of our products, we've also considered the professional life cycle in mind. So some of our products provide certain options and features that allow people, for example, to increase their cover if they qualify as a member of a profession, or if they become a partner within their professional practice. And also some of the claims that we have within that as well recognize the impact on professionals and especially professional practices or businesses after if a key member of their staff is impacted. So we very much take an approach of taking the market's products of coverage, but making them more tailored and specific to the needs of the professional segment over the long term.
Okay.
Yeah, without delving too far into the weeds, I think it's not only the products, but actually how the products have been underwritten, and PPS seems to have a very pragmatic approach to their underwriting. They understand the market that they're working in, and personally, from an advisor's perspective, I've had great outcomes for clients, especially in the mental health space, where PPS seem to have a really pragmatic approach to their underwriting in that space, so that then creates greater client outcomes.
Great. And you mentioned profit share benefit. I know that will be something of interest to a lot of people listening today. Can you give me a little bit of understanding about how that works practically?
Yeah, sure. So as an insurance company, we will basically over time will generate profits in excess capital, and other insurers might allocate those out to their shareholders as a dividend. Our approach is to allocate that to our members into their profit share benefit account, and all of those allocations then accumulate for the member, and so then when the member reaches age 65, they're then eligible to receive a payment of that profit share benefit. There's a couple of components to it. So at a high level, the first component is a component based on the premiums that are paid in respect of the member. So we allocate that every year based on the actual premiums. And the second component to it then is investment earnings. So after we make an allocation, there's a value associated with a profit share benefit, which we then invest, and the investment earnings on that value are also then allocated to the members. So it's the power of both the operation of the insurance company, but then also the power of compound investment returns on their accumulated profit share benefit value as well.
And I know it's early days for New Zealand, but are there some examples that you can sort of give to help listeners at home think about how these policies might be appropriate for them?
Yeah, sure. So if you have a chat to your accredited advisor like Joey, they can help you consider what your insurance needs are. And then PPS offers quite a comprehensive suite of insurance products to meet those needs. In South Africa, where we've been operating for 80 years, what we've seen really is the power of mutuality in terms of some of the decisions that as a company we can make without having regard specifically for investors, right? Because our customers are our investors, so we have a few more levers to pull under certain circumstances. So a good example, for example, would be during the COVID period, PPS took a view that they would expand the coverage that they provide under their sickness benefits, so under their income protection style benefits. So if people were unable to work, not due to illness, but for example, if they were quarantining at home, and you can imagine that for PPS with a pretty sizable segment of medical professionals within their customer base, that was a pretty significant part of their overall insured base, that those customers, those members were then eligible to claim for their policy. And the way that PPS was able to do that is basically recognising that if they chose to temporarily widen the claims criteria that apply, that just would mean lower profits that year to allocate to members. But the ability to do that, recognising that either we pay claims or we pay higher profit share benefits, I think is a pretty unique aspect to mutuality.
Great. And Joey, as a PPS accredited advisor, is there anything else that you'd like to add so that our listeners are aware?
I think the main thing would be to make sure if you are interested in looking at the proposition that you do reach out to your advisor. PPS is obviously a great company, but it doesn't necessarily mean that PPS is always the right provider for you. So it would be definitely worth getting some advice. I think in terms of PPS joining the market, it's really exciting to have a new competitor within the insurance landscape. And Len, help me out here. When's the last time a new insurance provider entered the market?
There was one in 2011, but the last time a mutual insurer entered the market, I think, was the 1970s. So It's been a little while.
Wow.
Yeah, so I think my only advice would be to reach out and get some advice.
Great. Look, thanks Len and Joey for coming along today and talking to us about personal insurances. For everyone out there, if anything today has sort of made you think twice, have I got sufficient insurance, or actually are these types of policies the types of things I should be investigating? Please feel free to reach out, and I'd be happy to put you in touch with Joey Gregory from Share NZ to have a look at your specific circumstances. We're here to help.